How did one man build a $65 billion empire and deceive thousands of investors, including celebrities, charities, and financial institutions for decades? What drove Bernie Madoff, a respected Wall Street titan, to become the mastermind behind the largest Ponzi scheme in history? And the biggest question, how did he get away with it for so long? Bernie Madoff's Ponzi scheme is one of the most infamous and largest financial frauds in history. Bernie Madoff, once a respected figure in the finance world, created a scheme that defrauded billions of dollars. This scheme deceived everyone, from ordinary individuals to institutional clients. The scheme lasted for several decades, with Madoff's actions becoming a symbol of the devastating consequences of fraud and financial crimes. In 1960, Madoff secured a job as a stockbroker. His early success was based on building a respectable company and making wise investments. In 1960, he founded Bernard L. Madoff Investment Securities LLC, which initially focused on market making, the process by which firms buy and sell assets to provide liquidity to financial markets. Over time, Madoff's company developed a solid reputation, and he became known for his innovative trading methods and his ability to deliver stable, high returns to his investors. As a result, Madoff gained the trust of the financial community, which helped him attract a growing number of investors. By the 1980s, Madoff began steering his business towards fraudulent activities, despite the fact that his company was legitimately engaged in market making and trading. Essentially, a Ponzi scheme operates by using the money from new investors to pay returns to earlier investors, creating the illusion of a profitable investment strategy. Instead of making real investments, Madoff was taking money from new investors and using it to fulfill promised returns to previous clients. This allowed Madoff to continue the scheme while maintaining a facade of legitimacy. What made Madoff's Ponzi scheme particularly effective was his ability to combine the trust and respect he had built within the financial community. His firm was seen as a prestigious operation, and many prominent individuals, institutions, and hedge funds eagerly invested with Madoff due to the perceived safety and reliability of his returns. Madoff's connections with high-profile clients, including celebrities, wealthy families, and major financial institutions, helped create a sense of credibility and trust that made the scheme even more successful. Over time, the scale of Madoff's Ponzi scheme grew to unprecedented levels. It is estimated that the scheme defrauded investors of nearly $65 billion, with a direct loss of approximately $18 billion in principal. Madoff's clients included some of the wealthiest individuals and families in the world, as well as charitable organizations, pension funds, and other financial institutions. Madoff's operation was designed to be highly secretive and exclusive. Clients were often told that Madoff's investment strategy was so sophisticated that it could not be revealed, and they were encouraged to keep their investments confidential. This secrecy, combined with Madoff's insistence that his clients would receive guaranteed returns, created a sense of reassurance among many investors who failed to ask questions or conduct proper due diligence. The scheme succeeded not only because of Madoff's charisma and reputation, but also because he was able to consistently deliver returns, at least on paper. Madoff's firm periodically issued account statements showing profits, which were fabricated to maintain the illusion. For those who had made initial investments, the returns were substantial enough to prompt them to reinvest and refer others to Madoff, thus expanding the scheme. Madoff's Ponzi scheme operated by taking money from new investors and using it to pay profits to older investors, creating the illusion of substantial returns. In reality, the funds were never invested in the securities or financial instruments that Madoff claimed. Instead, the money was simply moved around, often hidden through a series of fake transactions and used to fulfill clients' withdrawal requests. Madoff's firm employed a small group of employees who helped manage the day-to-day operations, but only a few individuals were aware of the true nature of the scheme. The Ponzi scheme began to unravel during the global financial crisis in December 2008. As the market crashed, many investors, including those who had invested large sums with Madoff, grew anxious and demanded to withdraw their money. Madoff was unable to fulfill these requests because there was no real money in the accounts, only paper profits that had never been realized. As a result, Madoff was forced to admit that his firm was unable to meet its obligations to clients and that the entire operation was a fraud. In December 2008, Madoff was arrested by the FBI and charged with securities fraud, wire fraud, and money laundering. His arrest came after his sons, Mark and Andrew Madoff, informed authorities, fearing that the scheme would collapse and they could be implicated. Madoff's arrest brought the full scale of the Ponzi scheme to the public's attention, and the world was shocked to learn of the massive fraud that had been perpetrated over several decades. In March 2009, Bernie Madoff pled guilty to 11 federal crimes related to his Ponzi scheme, including securities fraud, money laundering, and perjury. His sentencing occurred in June 2009, when he was sentenced to 150 years in prison for his role in the fraud. During the legal proceedings, Madoff was also ordered to forfeit any assets related to the fraud, including his personal wealth. He was required to compensate the victims of the scheme, although full repayment was unlikely. After Madoff's sentencing, many of the victims faced devastation, having lost their life savings or been financially ruined by the scandal. Thousands of people, from retirees to hedge funds, watched their investments disappear, with some losing their entire life savings. Many charitable organizations were also affected, including notable ones like the Elie Wiesel Foundation for Humanity and the Wonder Kinder Foundation, founded by Steven Spielberg. These organizations had trusted Madoff's firm with their investments, and the losses were devastating. For the victims, the outcome of the scheme was a life-altering experience. Many were financially ruined, with their futures uncertain. The emotional toll of being deceived by someone they trusted was also significant, as Madoff had used his reputation and connections to establish credibility. Bernie Madoff's Ponzi scheme remains one of the most audacious financial frauds in history, defrauding thousands of individuals and institutions of billions of dollars.